It all comes down for us to trying to assess and manage risk. And one of the things we try to do is we really try to go back many, many years when we're looking at a business. So something like US Bancorp that we now own, we've looked at it and studied it for over 23 years. And that gives you a reasonable perspective on how management behaves. And we try to focus on three things with many subsets under each. The first is the fundamental economics of the business and the industry in which it competes, because they're interrelated. And so that's the first point. The second point is the quality of management, how well they can manage the business, how well they allocate capital. Good leaders, we look for vision, their ability to communicate and articulate that vision, and their ability to exercise sound judgment. And if you look at a management team over a long period of time, and you meet them as well, you can assess their vision, their ability to articulate and communicate that vision, and their exercising of sound judgment. And so that's what we look for on the management side. And then finally, it's valuation. And valuation is a huge driver because in many cases, the first two, the economics of the business and the industry in which it competes, or the management, are within our strike zone. So we're very comfortable with both of those factors, but the valuation is at a price that we're not comfortable with. We're simply not comfortable paying that kind of multiple given what we think the growth rates are. I mean, there's a couple great companies, C.H. Robinson's one of them. It's a great company. They're simply not growing in a very challenging environment, and the multiple's higher than we'd be willing to pay. But a terrific company. High returns on capital, asset light, et cetera. And I could give you many examples, but that's just one off the top of my head. So those are the three things we try to look at to really understand. And we don't try to be precise. We say to ourselves, we try to be as simple as possible after we understand the business. What do we think they can grow their revenues? And we try to be very conservative. What do we think, how much operating leverage do they have? What do we think they can grow their earnings? So we think they can grow their revenues 10%, we think they can grow their revenues 15%, and we think that's very reasonable. What kind of a multiple, given the returns they generate, would you place on that kind of a business? And that's what we do, and we're constantly making those judgments. And so that's basically how we decide. But it all comes together, and we will sit and be patient unless we can find some companies that meet all those criteria.